Hi guys, Boris Schlossberg from BK Forex. Welcome to the trade setup for 1/14/2013. Past performance not indicative of future results. Trading Forex carries a high level of risk, should not be suitable for all investors, and high leverage can work against you as well as for you. So before deciding to trade any such leverage products, you should carefully consider your investment objectives, level of experience, and risk appetite. Possibility exists that you could sustain the loss of all your money, so you should be aware of all risks associated with trading on margin. Information contained here should not be relied on as a substitute for extensive independent research. You should do your own research. The information and opinions presented do not take into account any particular individual investment objectives, financial situation, or your needs. So all investors should obtain advice based on their unique situation before making an investment decision. We are not responsible for any investments made by readers and clients as a result of any information contained here, and we do not render any legal, tax, or accounting advice. And if you want that advice, you should seek professional advice. Read this disclaimer very carefully for all of your objectives and understand all the risks involved in trading Forex. Now, very, very, very interesting start to the session in Asia as we began. In Asia, we had a big squeeze, even though Japan was out on holiday, all the way up to the 3,400 in the euro dollar, which, as you can see now, is actually losing a huge amount of its momentum. We're actually now right back to the session open highs. That is, we closed out at around the highs in New York were 65. We opened up at around this level, gapped up a little bit into the Asian session, took out the 3,400s, and now right back to the 65s. It's kind of very interesting to see if this was the peak level here in the euro dollar in the near term. The reason why the highs got hit at 3,400 was because Evans, in a speech in Hong Kong, basically reaffirmed the idea that QE is still on the table, that the Fed is not going to do anything, that the Fed is going to stay with QE3 until jobs numbers start, NFP numbers start to print 200,000 or more. So all of that was seen as a foreshadow of Bernanke's speech, which is going to be done later today, that pretty much is going to reaffirm what people think is going to be a pretty dovish stance by the Fed. So that created a whole big squeeze in the euro, took us up to 3,400. In addition to that, we also had obviously stories on the yen, which I'm going to get to right now. But what's interesting right now is, as we're looking on the euro, is we're unwound the whole Asia session high. And now, until and unless we come back up to the 34 level and retake it, the bias has actually turned negative. We're breaking the session lows. We're going to have to see how much consolidation happens here. But if we start breaking the session lows here and move, in my opinion, below the lows of basically New York session, which was around 33.30, right around here, we have a chance to kind of unwind the whole thing back down to 3,300. So it's interesting to see how the price action develops. I'll get into the forward event risk in just a bit, but I think what's fascinating is the fact that the whole Asia session highs not holding. That's really the big story as we enter into the European session. And until and unless we come back and retake them and maybe go to 34.10, the bias now turns negative for the time being, as profit taking kind of overtakes the earlier squeeze. Now, the story on the yen side was also very, very bullish. Yen took out fresh, I believe, 3-year highs, fresh, certainly weekly highs, fresh daily highs, everything. Went all the way out to 66 on the squeeze. And part of the squeeze was because over the weekend, even though Japan is on vacation, there were reports that the BOJ is going to accept the 2% target. They're basically going to get on board with the whole ABI QE story, and that obviously created a big squeeze in the yen. All of that, by the way, resulted, of course, in a massive move up in euro yen. And I think one of the key things that we're seeing right now is a liquidation in euro yen back to the not even back to actually last Friday's session highs. Yen squeezed all the way out to 120 and came back down. So I think that's kind of interesting, almost like right here, 1997, and came back down to come back. So as Europe comes back on, we're seeing tremendous amount of profit taking off the Asia session highs, and I think that may actually determine the directionality for the rest of the day. Obviously, 119 in the euro yen trip's going to trip up even further stops to the downside. So watching all these levels very carefully as we go forward. Aussie was hampered early in the session by very weak ANZ job numbers. I think the 9th month in a row that job numbers have actually come back down. We broke the New York session lows early at 105.20, then came back and rebounded and bounced back up as kind of risk appetite came back. And it looks like Aussie actually looks healthier of all of the majors right now, and it's probably a lot of flows that are going into the Euro Aussie that everybody's watching. Really, the interesting story right now is not even so much the majors, but all of the crosses that that are pushing everything around. So if we look at the Euro Aussie obviously peaked out at 27 in Asia, and now redistributing itself back down, maybe even down all the way down to 126. So it's kind of, the thing that's interesting is that Euro was very, very strong in the crosses, and now starting to come back off the crosses. The one cross where the Euro has been just viciously strong is Euro Pound. Euro Pound made new fresh session highs here at around almost 83, and now it's coming off, but not much, because Pound is the one currency that is definitely lagging everybody else, and the pound is actually now coming off of whatever the putrid little rally it made. To me, the pound made lows here below 161 off a very weak GDP estimate on Friday, and these lows actually could be retested. So I think, to me, the really interesting part here is the lows I think were around 60.88. So 60.90, 60.88 lows off of Friday, broken to the downside, would really open up a way towards 60.50 in the pound as the day progresses. So that should be a big story, and obviously that's going to translate in a continuation in the rally in the Euro Pound. Euro Pound, obviously, the big area here, 8,300, that gets taken out to the upside. We really have much more further to go. If you look at the longer time frame, if we go back, let's just say, I don't know, let's go back to actually, it's going to have to go back to dailies on the Euro Pound, and we see that we're making fresh daily highs in a long, long time. So takeout of 83 levels should be very bullish for the pair on a continuation basis, and obviously weak for the pound. So irrespective of how strong the euro or trades, it's going to be the pound that may determine a lot of this euro pound price action as we go forward. Now let's just take a look. Let me see if I can pull up the calendar. Bear with me. I got to pull up the calendar. There isn't much on the calendar today. Let's see if I can actually get the calendar inside the not much on the calendar today. The Kiwi data obviously was a little bit better. Aussie data was weak, and as we go into the day, we have Eurozone industrial production, not of great import. We have just Canadian data, which obviously not of great import, and then we have just commentary from Williams and Lockhart later in the day. So there's literally nothing on the U.S. calendar. It's really going to be all driven by flows off of the recent price action. To me, the really interesting thing here is, and again, if you look at the euro, I'm going to bring the euro back out, is the fact that we're unwinding all of the squeeze out of Asia, and I think that's a takeaway. The unwind of the squeeze out of Asia, if we don't stabilize above this 33.50 level in the euro, start breaking it to the downside, it looks like it could be a much more steeper retrace in the euro, led by euro yen as well, all the way down perhaps through the 119 handle. So 33.50 in the euro, 19.50 in the euro yen, all key levels. Aussie nowhere close to the 106 level so far, and it's going to require a very large move for it to come back up to those levels. But that's pretty much how the day sets up. Wishing you guys the best of luck and the best of trading, and we'll see you guys in bkforex.com.